So in today's video, I want to go over bias and execution, right? So you have a strategy, the session liquidity model, but that doesn't mean you're supposed to trade the session liquidity model like you are a robot, right? Because trading the session liquidity model, if you trade it blindly, you were to code a bot and it was to actually trade the setup for you, then you might have maybe like a 60% win rate or something like that. But if you tie in discretion, which I am about to teach you here, learning what you should actually be expecting, how to develop a proper bias, and then your session liquidity model aligns with your bias, then your win rate skyrockets to like the high 80s when it comes to using this setup. So, how do I create a bias, right? I create a bias by simply going over to the higher time frame, and I'm not going to do this. I don't care about this, but even if I do something like this, clearly we're bullish. No, what I am gonna do is I'm gonna go to the hourly time frame and I'm just going to look at the last previous candles. Up, I'm bullish. Trust me, it gets a lot more complicated than that, but that's simplicity right there at its core. Boom, I'm bullish. Okay, let me mark out all my session opens. 7, 1, 19, right? Then let me mark out all my session highs and lows. Session high, session low, session low here. And I need to go down to a smaller time frame to be able to find the session high here. This is the session high. Cool. Because I'm bullish, I have to look at where the session we're coming from. This is London session, correct? In London session, let's genuinely think about it. If we were trading London session, we just swept Asia session highs in London session. I am expecting some form of retracement lower. We have not made any retracement lower, so I need some type of retracement lower. But because I'm not trading London session, I'm trading New York session, I can already tell that I need a retracement lower. Okay, I know we're gonna get the retracement lower, but is the move gonna be lower? So are we going to do this? Or are we going to do this? Which is it? This is because this is all the session liquidity model. Number one, you wait for a reaction, right? So you don't predict, you react. But you can have an inference of where you think the market is going to go by looking at what price previously did. Where are we going? Where are we coming from? Okay, let's look at where we're coming from on the hourly time frame. What did I teach you about fair value gaps? On the 1 hour time frame, we inverse this fair value gap. Session low, resting right inside this fair value gap. Guys, this is the definition. Swing high, left untapped. So we haven't swept any liquidity to the upside. This is the definition of a setup that you're supposed to risk heavier on. I want this low swept. Look, this is why we don't care about sweeping random lows. It swept this low, inverse this gap right here, this 5-minute gap, continue higher, and this trade fails. Why does the trade fail? Because this is a higher probability FVG, not FVG, session low. Session low inside a 1 hour gap in a trend that we're already bullish. 5-minute fair value gap. Do we get it? Yes, we do. Ladies and gentlemen, this is a long position and it's very beautiful. If you want, you have to go in on the fair value gap that inverses the FVG. I wouldn't put it here because there's fair value gaps right here beneath it. You could put your stop loss right here, but the safest bet is right here. Dang, that's 130 pips or ticks. That's too much. Yeah, but do you know the possibility with gold? If you target the next session level, That's 170 ticks. You're already past the 1-to-1. If you target these highs up here, you're at a 1-to-2, and gold can give you that. Ladies and gentlemen, TP absolutely smashed. That's how you form a bias while trading the session liquidity model. It works just like that. So I wasn't looking to short here from this high up here. I'm not looking to short. Why? Because I know we're in a bullish trend. I am looking to long from this low here. So I create my bias. I see what session liquidity level aligns with that bias, and I trade from it with the entry trigger that I showed you, and I just, boom, enter into my trade. Ladies and gentlemen, that is the session liquidity model in a nutshell. It's as easy as that. And I obviously have different forms of it. I have a continuation model. I have a reversal model. I have multiple models with the session liquidity model. But in a nutshell, this is how you find a bias. This is how you tie the session liquidity model to the bias, how you find draws on liquidity, how you develop trend, and how you can catch trades in the right direction. That's all I have for y'all today. I'll see y'all boys in the next video.